Hey everyone, welcome back to Broward-MIAMI, a leading real estate podcast in Broward County. Now this episode is a conversation between 2025 Miami Chairman of the Board, Eddie Blanco, 2025 Broward-MIAMI President Larry Singh, and Miami Director of Outreach, Jalina Pittman. The group talks about the power of the MLS, how realtors agree to put their data and listings into the MLS, and how that data significantly helps the public and our consumers. Other topics include the resilience of Miami members, selling REOs and foreclosures in today's market, building global partnerships with markets such as Dubai, and a lot more. Don't miss this episode. Whether you're driving, walking, running, at the gym, cooking, whatever you're up to. Thank you for your time, and thank you for listening to the official Broward-MIAMI podcast.
Good morning, good afternoon, good evening, and welcome to your Broward-MIAMI Insider. We are here today to tackle those core real estate topics, and of course, we're joined by your co-host, 2025 Broward-MIAMI President Larry Singh.
Hello, everybody.
Yes, and we have the privilege of being joined by your 2025 Chairman of the Board and Broker of Stratwell, Mr. Eddie Blanco. We are going to dive into key topics today. So whether you are driving, wrapping up at the office, or settling in at home, get ready as we dive into REOs and foreclosures. How's it going today, Larry?
Good. How you doing, Jalina?
I am marvelous. I really want to hear from you. Why now for REOs and foreclosures?
It's funny because there's so much around that's floating around the real estate market right now. And if you're a real estate agent or a real estate professional, however you want to identify as, right? You start to see so many people start to call you and say, I'm looking for a foreclosure. I'm looking for an REO. I'm looking for this. And we try to explain to them that this may not be the market to look in. That type of property might not be what it is. So I said, you know what? You and I had a conversation and said, let's bring in the expert on this. Let's bring in somebody that's been doing this for a very long time to shed some light on it. So we decided to call up our chairman of the board, Eddie Blanco, and say, you know what? We need information on this. The realtors need information on this. But more importantly, the general public needs information on this. Because the way I look at it is, I get that call that says, 25 years ago, my uncle's cousin's sister's brother bought an REO for $7,000. I want that deal. So that's why I wanted to bring it in to see if you could still get that deal, right? Or if that's just a pipe dream to somebody that has had that happen in the past and probably never going to see it in my lifetime again, right? So that's really why I wanted to have this discussion today.
And it seems like the perfect time to looking at the past to see how we're moving forward in the future with REOs. So let's bring on our guest of honor today, your chairman of the board again, broker of Stratwell, I do apologize, Mr. Eddie Blanco.
Pleasure to be here.
Yeah,
really glad that you have
applause
us
in the
here.
background.
What's that?
We need some applause in the background for you. Yeah.
Yes.
We're all here.
Yes.
It's great to be here. Thank you.
We're glad that you're here with us. So before we jump into the meat of the conversation, tell us a little bit about what it's like being the chairman of the Miami Association of Realtors. What surprises you may have encountered, and overall, what's your mission moving forward? Three-part question for you.
Yeah, three-part question. I'm going to take them one
You're
at
on
a
your
time.
own on that one, buddy.
Yeah, we'll take them one at a time. But, it's really an honor to be the chairman of the board. Miami Association is the largest realtor association in the country.
Yeah.
And most people don't realize that our realtor association nationwide is the largest trade organization in the United States. Yeah. So it's really exciting to be involved. What I love most about being the chairman of Miami Realtors is the relationships that I've forged over the time being here. Yeah. Our professional team is fantastic. Our leaders are passionate, are committed, are talented. Yeah. And so it's been a great experience being here. You asked me what surprised me. Yeah. What surprised me is really the resilience of our members. Okay. We have our members have seen some challenges. Let's just say, right, over the last couple of years, and you can see the numbers that they continue to perform. They continue to get out there and sell real estate. They continue to make the American dream possible, despite all the rhetoric and the news out there. Our members are committed. They're still coming out to trainings, education, and ramping up. And that, I kind of expect that from our members, but I'm surprised at the level of resilience. It's pretty awesome.
Yeah, because even hitting back on the point Larry mentioned about how REOs are being sold at, 25 years ago you mentioned 7,000. From that experience to now, we're going to really see how resilient our members have been as the market fluctuates. So to hear you mention that is very key to the conversation today.
It might not have been 25 years ago, but it was at least 17 to 20 years ago, right?
17 years.
Yeah,
that was 17 years.
that's a long time. So first of all, congratulations on a successful year so far as the 2025 chairman. It has been an honor to serve with you. That relationship that you forged, I hope I'm considered as one of them, because
you are. You
have been one for me, right?
Of course.
Under your leadership, we've gotten so much done this year, and we've pushed the boundaries on everything, including this podcast that we're sitting in right now, which goes out to all our membership, but also to the general public. Now, overall, because not everybody gets to speak to you on a day-to-day basis, right? So overall, what was the mission coming into this year, and how do you think you've really gotten to the point where you are today from that mission?
As it relates to Miami Realtors? Yeah, really the mission was to keep everybody clear on one thing, which is that if we're moving forward together, really, and that was our theme, right? If we're moving forward together and figuring out how to stick together, the power of the MLS, and really explaining the value beyond the MLS. But I think those two things it's not just access to the MLS. Our members see that, but understanding the power of the MLS, which is that everybody's agreed to put our data in there. And that data helps consumers. A lot of people don't realize that if you're on one of those portals online, that data feeds from the hard work of our members going out, getting listings, and bringing that data into the MLS system. So your hard work helps me in my job, and my hard work helps you in your job. And that collaboration and teamwork is what makes our MLS and our Miami Realtor members stronger. And so I really wanted to continue to share that message, because there have been people out there that, have complained and have expressed concern about, maybe, I should part away from here or part away from there. And I was like, listen, that's a bunch of nonsense. Together we're stronger, and let's continue to move forward.
Well,
together.
it's funny that you bring up that point, right? Because what a lot of people don't realize is that our systems here that are in place are feeder systems for other things for the general public to get their information, right? And the secondary users also. Yep. So if you're not familiar with the secondary users, right? I'm talking about when you're trying to calculate a price per square foot for construction, or you're trying to value a property for an appraisal purpose. They use all this data that we are collecting from all of our members, which is invaluable, because you need to know how much your house is going to sell for. You need to know if you're going to add an addition to it, how much it's going to cost. You need to know what the market value is of those things are. And when you have the data starting to be segmented, it gets a lot harder. Oh, yeah. Remember, I used to hear stories. I was a little bit towards the beginning part of it when I first got into real estate. But I used to hear stories about people telling me how the old MLS books used to be, right? And they used to have a binder. They used to get updates, and they used to have to tear out the pages and then put new pages in, right? I came in on the first iteration of the computer version. I'm not that old, right? But I'm not that young either. So I remember hearing those stories about, this is so much better. It's all in one place. You can share the data. And it seems like a lot of these situations are forgetting what we've gone through in the past about, having the data not accessible to everybody else.
Yeah. When we went to, as we've traveled around the world, and we realized that most Latin American countries, most of Europe, doesn't have a centralized MLS system.
Correct.
And so a consumer has to go to multiple different places to get the source of the information. And then they have to, and in some cases, the property can be listed by 3 brokers or more with different prices on the same home. Mm-hmm. So talking about consumers not having access to the right data, consistent data, this is the power of our MLS. And all these people throughout the world that we talk to want to find out how is it that we built such a cool system.
Yeah.
Mm-hmm. And then there's people talking about how is it that what really is the value of this, and that just boggles my mind. So that was the message that continue to make sure that everybody understands the value of the MLS, the value of our association goes way beyond not only is the MLS fantastic, but the value of our MLS goes way beyond our MLS. It's in our education, it's in our networking, it's in our
Global
resources, it's our partnership, global partnerships. It just continues, right? That's what we want to continue sharing the message. And this podcast is part of that, right?
Yeah. Right.
Sharing the message and bringing value to our members.
Well,
Absolutely.
you have, and just touch on it briefly, you have been instrumental in some of these partnerships that we've had globally this year. Just if you could just rattle off a couple of them that you helped with signing of this year.
Yeah, when we were in Dubai, when we were in France, in Cannes, we had a connection with somebody from Dubai who we'd already had connection with. But then from Abu Dhabi, a gentleman that we met, we were able to make that connection. And now the foreign ministry of real estate for Abu Dhabi and our association have created an alliance. And so that's important because the Arab country money that's available, that's interested in investing in Miami is growing, and our connection to them is important. So those are that's part of the global partnership.
So I think that makes like 279, give or take.
We're
Don't quote me on that. I might be wrong on the number. Might be a little bit more, might be a little less. but it's right around that number, which is amazing because that makes us worldwide.
Exactly.
Right? It makes this brand worldwide, and it makes the accessibility that you get from this brand worldwide. So and you'll know exactly who I'm talking about when I say this, but I've actually had the privilege to watch one of our governors build a global business through our global network. Yep. And she went from being a local realtor to now being a global realtor in the span of a few years, just by tapping into the opportunities that you have helped create this year, the past chairmen have helped create in the past, right? And that's powerful because now you're expanding your business. And if you're looking as a consumer to actually go overseas, buy a property, or if you're overseas looking to buy a property here, you'll know who to come to. Right? It gives you accessibility. And I think that's what all of this really comes down to. It's accessibility, right? Not just to our members, but also to the general public. The more information we can give them, the better it really comes out to being.
Right.
Absolutely. So that relationship, the accessibility, we're going to hit on all of those as it relates to REOs and foreclosures. And when we're doing our pre-talk for this, you mentioned that you have that history or that niche for REOs and foreclosures. Could you share a little bit more about your time working with that part of real estate?
But Arvida Realty, I was working for them. Terry Bursach was the manager. And she said, hey, how would you like to sell some REO? And I said, what's REO? And then
we laugh, right? Because we're in this business, so we laugh. But the reality is, people don't really know what REO is.
Right.
They're in my experience, people think foreclosure and REO is the same thing.
Right.
Right? So we're going to touch on that a little bit later,
Sure.
but finish your story.
I got trained by I didn't know at the time, but this guy, I was a young kid. I was in my early 20s, and this guy pulls up in a big Cadillac Escalade and takes me out to the first property, and I was like, wow. And he showed me around, and he showed me how to do everything, and little by little, that relationship grew and grew, and so that was through a connection through Arvida, who had at the time Coldwell Banker had already bought them. Actually.
Okay.
And they were NRT REO, and it was an REO firm. And so with this outsourcer, it's an REO outsourcer, they work with banks, and they are the middleman between an agent and the bank. And that's what they were like, what they call a REO outsourcer. And at the time, did very well with them and grew into the business. And so it was fun. And the agent that, there was an agent in the office who didn't want to do it anymore. And I was young and ambitious and said, let's do it.
Make it happen.
And that was in 2001. So, yeah, that was a long time ago.
So let's touch on, let's take a step back. And I said to you, most people don't know the difference between an REO and a foreclosure. So something you may not have known, right? As many of you know, my wife is a real estate attorney, and where she got her start as a real estate attorney was in foreclosures and REOs, right? So I had the benefit of learning from her very early on in my career, right? But for people that don't have that benefit at home, right? What's the difference? What's an REO? What's a foreclosure?
So an REO is real estate owned, and that is a term, actually it's an accounting term, And it's the term that banks used. Back in the day, used to call it OREO, meaning other real estate owned, because real estate owned was the bank, and then everything else they owned was other real estate owned.
Gotcha.
And foreclosure is a legal process through which a lender needs to go through to take possession or ownership of a property.
Yeah.
When you get a mortgage, when you get a mortgage, you don't really get a mortgage. You give a mortgage. It's a little term.
Yeah.
Nuances.
Yeah.
But you sign a note promising to pay, and you also sign a mortgage, giving the permission to a bank to take the property back through a legal process should you not pay your note.
Right.
And that's the difference between a foreclosure. It's a process,
Yes.
and an REO, which is the end of that process if it goes through the entire process.
And it's funny that you bring that up, right? Because you're actually giving the bank a mortgage on the property.
Yeah.
And you're giving them permission to go through the foreclosure process to turn it into an REO at the end, right?
That's right.
And when you listen to people talk on a day-to-day basis, they have it backwards, right?
Yeah.
Yeah.
They're like, oh, I'm going to get a mortgage.
Right.
No, you're going to give a mortgage on a property that you're buying. And it's funny that the vernacular changes on people that are outside of the industry, right? And I listen to people now, and we started this podcast, and my uncle's cousin's friend's brother's sister's cousin bought an REO 17 years ago. Can I get one today? Well, no, the market's completely shifted, right? And that's not how things are done now. And we've gone through COVID, which changed the market again. And now we're at the tail end of what's happening from the COVID era. Now we're going through a new change in this cycle, right?
Right.
And people don't really understand that because somebody bought something 17 years ago, doesn't mean that you're going to be able to get it today. And that's the hardest part. And the best way that I can show that is by the verbiage that you use when you're talking about things, right? It's the understanding. And that's why working with a professional is so important, in my opinion, because a lot of people go into court without an attorney. But if you actually look at what the judge says to you, there's no special treatment. There's no not understanding the process. And when you understand the process, everything comes into your favor. So if you're that person that goes through the process without a professional and something happens, I mean, you have to take the risk with it, right? And I think that's really the crux of what the importance is of what we're going to be talking about today. So you started out, you're 20-something years old, right? You're getting into this business. They're showing you the ropes. What'd you think? Right away.
It's a lot of work. That's a lot of work.
So break that down for me. What do you mean it's a lot of work?
I mean, there's a lot involved. I mean, things have changed a ton, right? I mean, back in the day, I'm dating myself, but we used to take, pictures, go get them developed, stick them on with a 3x5, 35 millimeter photos. I mean, FedEx the packages. I mean, things have changed. It's not the way it is anymore. But there's a lot that's you're responsible for when you represent a bank that's doing REO. You become basically their property manager.
Right.
Okay.
So you have to handle everything. Like you just get a property and you don't know anything about it. And so now you have to get the water on, the power on, you get the grass cut, you got to get the windows
Really
boarded
property
up.
management,
And
yeah.
you're
So
basically,
you have to do all that?
yeah, we're responsible for that. In some cases, the clients have their own vendors to do that. But in a lot of cases, certainly back then, when I first was doing it, it was all us to do that. Like we had to get the guys to do it. We had to get the vendors. We had to get the bids. We had submitted it. We had to pay those services and then request reimbursement. So it required a lot of upfront capital and a lot of management of a lot of little details. So and here's the thing. Here's the kicker. You don't get paid extra for any of the extra work. So yeah. So then there's a valuation done, and then they want bids to cure the property. What would it take? This is the as-is value. Here's how much I think you should spend on repairing it. And if you repair it to this standards, then it's going to be worth this much. And doing those analysis and helping them figure that out, and then getting the bids, and then getting the work done, and overseeing that work, and paying for all that work. So, all that is extra work that you don't get paid for. So a lot of agents say, it's great to be an agent that's getting all these properties from the bank. Yeah, well, there's a price you pay for it, and the price you pay is all that extra work up front, and knowing it, and then being held to a pretty high standard in terms of you said that we should do all this work and we're going to get this much, and we did all this work and we haven't got that much. What's going on? So you have to be accountable to that, right? So, or you said we should sell it as is and now it's selling for more. And So there's scorecards and all that. Now it's all technology is taking over. And so a lot more data-driven, a lot more information. And the client's actually different. That's another huge difference of what it was back then to what it is today. When we learned in 2008, but prior to 2008, banks looked at REO as a liability because of the way it literally was a liability on their books. But what's happened is that now what these banks do when they have a mortgage that's behind is they sell them. They sell the mortgages that are behind to firms that specialize in buying these notes that are Wall Street hedge funds. And these guys that are buying these notes are very savvy, and they don't look at this as their goal is to reestablish that mortgage, get it paying, and then resell that note for profit as a performing note. They buy a non-performing note, they get these people paying, they package the loans again, and they resell them for profit as a performing note. That's their business. Sometimes the non-performing notes end up in the worst position possible, which is an REO. And when it becomes an REO, they don't want to give it away. They're Wall Street hedge funds. They are not
in the business of losing money.
They are not in the business of losing money. So now they're going to say, what is our best execution? And they're going to really try to execute at the highest level on that property.
So let's go back really quick, clarify. So you mentioned the REO is the worst case scenario versus having that hedge fund sell it. Could you explain that difference again, or who's involved for that process?
Sure. So they're buying this mortgage note, right? They're buying this mortgage note on this property. They're doing it in big chunks, right? They're not buying one by one.
Who are they?
Who the hedge funds.
Okay.
So a hedge fund's buying this from the bank as a bad note. Bank has this pool of bad notes. Their people aren't paying on them. They're what they're called non-performing notes. Fannie Mae, Bank of America, Wells Fargo, they all sell these mortgages. They sell them. These hedge funds buy these mortgages as non-performing loans. Then they reach out to all the borrowers and they say, hey, I'm your new bank servicer. Let's work this out. They try to work it out with the borrower and get the borrower on a payment plan and structure to repay. That borrower starts paying over time. That loan becomes now cleaned up, and it's called a re-performing note. And then they'll sell those re-performing notes back into the market. It's a whole world of market that we're not aware of on our level, right?
And this came from after the 2008 era.
Yes.
Right?
Yes.
And what we're really talking about here is very interesting because a lot of people don't really understand this. That's a whole brand new business model. And these hedge funds that are buying these non-performing notes, think about it like this. You buy a house that's not in good condition, you fix it up, and then you resell it, right? It's the same thing they're doing with the mortgages. They're buying something that somebody's not paying on, that's losing money right now. They restructure it, so now that you're making money on it, and then they resell it. And that's how they make a profit.
So what process of foreclosure does that fall in? Because you have your list pendants, you have your, I guess it falls there before it goes into, give me one, before REO, there's one more step before REO, bank sale or auctions.
Right.
Does it fall there or right before the list
this
pendants?
this is well before that. This is when they're in default, and sometimes the default they're not even publicly. So the list pendants hasn't even been filed in many cases. This is just they've missed payments, maybe 90 days, but the bank hasn't issued a letter to the owner, and they sell the note. Instead of dealing with they don't want to deal with that tenant. Because you know what it is? The big Bank of Americas doesn't want to be the guy saying, hey, if you don't pay me, we're going to foreclose on you. So instead, they sell it to Larry. Larry can be the bad guy. He can call them and say, I'm your new bank, and you owe me, and let's work it out. Because the Bank of America's got really, and I'm using Bank of America. It could be Chase, Wells Fargo, any of the big brands. None of those consumer brands wanted to be tied up with taking back properties from people. They got ugly. Well, they all paid big fines. They all got they got a lot of bad PR for it. So now they're out of the business. You will not see them foreclosing generally. They're generally selling these notes to a Wall Street hedge fund who, again, that's why people think, I'm going to buy a foreclosure, I'm going to buy a deal. Not anymore. There are some, and they're nuanced, and we can go into that, but it doesn't generally happen the way it used to happen.
Okay.
And with the amount that was coming in 2008, because I was in real estate at that time. I had a different role, but I was in real estate, right? The amounts that were coming in 2008, 2009, there were so many of them that they opened other departments that still couldn't handle the volume, right? So mistakes were made.
Sure.
Right? So what happened was going to these now secondary companies to do it. Now the liability is on them. They're not making those mistakes anymore. Here, I'm selling you this non-performing note. You take on the liability. You get it reperforming, then come back to me and I'll rebuy it.
Maybe rebuy it. Yeah, exactly.
So it's a win-win for the lender.
Yeah.
Right? They're not taking a bath on the loss of the non-performing note. They're selling it at maybe a discount, but
they're selling it usually at a discount.
But they're not taking a bath at it if they had to go through the whole foreclosure proceedings and all of that stuff. You know, I wanted to touch on stuff because as we start, we're all in the real estate industry, and we use some of these terms sometimes,
acronyms,
not realizing that some of the people that are watching, or even if you're new to the industry, you don't really know what all these terms mean, right? So let me break down a couple of things, and Eddie, you jump in at any time. Remember, I'm not an attorney, so I'm just going to tell you what I've known from my experience as an instructor. Yeah, I just play one on TV, right? Not a good one too, but a Liz Penance, right? That is a notification to the public that a legal action is being filed on the property. That's all that is, right? People think that that's part of the foreclosure proceedings, but it's not. It's just a notification that's given out to the public that something has been filed, right? It's a legal action been filed.
And what's the time frame for that? When does that occur for homeowner?
So that usually occurs. It depends on the lender,
Okay.
the property, their policies, but that could be as fast as 90 days.
Wow.
Yeah, but usually they're going to work with the borrower a lot further out before they do that. Maybe 6 months.
Okay.
So yeah, I would say 3 to 6 months.
Okay.
And then foreclosure is the actual process of taking back the property, right?
But the lis pendens is officially the start of it.
Right. Right. You have to file lis pendens before you start the foreclosure process, but there's the process is called foreclosure, right? When the bank then takes it back, the property, you mentioned the sale of the property. That's the sale where it goes to court and the bank essentially buys back the debt, essentially.
Right. So yeah, what happens is that lis pendens is filed, and in that process, the owner is in full control. And a lot of people misconceive that. Like you have a lis pendens filed, you are in foreclosure,
Right.
but you're in full control.
Still
you
your
own
property.
that property. It's still yours. You can sell it. You can lease it. You know, it's yours. I mean, leasing is tricky because you'd have to disclose, but it's your property. So it's in lis pendens, and then it's basically a court proceeding happens where the bank says, "Hey, this guy owes me money. He hasn't paid me." And, the borrower can go and make claims to the court and fight legal. There's not a whole lot of stuff that can be done,
And that's been cleaned up a lot too.
Yeah, but attorneys can be creative and come up with kick the can solutions, but there's no end solution to that. Either you pay the debt or you're going to end up in foreclosure.
Right.
Yeah.
But but there's other options for them during that process in that lis pendens. Then finally the judge says, "Hey, final judgment." That's recorded, a final judgment, and that says, "Okay, you owe this bank this much." And then after that, a court date is set, like a court sale is set, and that is the public auction to buy. Anybody could bid on that home in that auction and buy that property back, including the owner.
Yeah.
And buy that property at that court date. It's online, and a lot of people go there to
the property
bid.
or to the
online and bid and buy the property that way.
Before you used to actually have to go, but a couple of years ago they changed that, and now it was online.
Yeah.
During COVID, I think that's where it really started to kick off the online stuff.
It was a little bit before. It was a little bit before. I think it was like 15, 16.
Because it used to be hybrid, right?
It was
for a little while.
Not to my knowledge. In Dade, at least not in Dade.
Yeah.
It went to online. It's converted, which opened it up to a lot of other people.
Yeah.
But so if the property goes to the courthouse, then one of two things is going to happen. Either a third party bidder will buy it.
Right.
That means anybody.
And the bid starts at the amount owed on the property?
The bid starts at the amount owed, or the plaintiff, the bank,
Okay.
can set whatever number they want.
Okay.
They say, look,
Oh.
this is much as owed, but we'll take this.
Okay.
And they'll take that, and then anybody can bid that amount, and it's theirs.
Okay.
They have to buy it. By the end of that day, they're paying for that
Cash?
lien, cash,
Okay.
close that day. That's it. That's all that's available.
But I do want to let people know that when you buy a property that's in foreclosure, or you buy something in a tax deed sale, there are still other liens on that property.
Subject to liens.
Yeah. So you have to clear that, and that's a whole different set of process. We're not going to get into today. That's a whole different set of processes. But that property is still subject to anything that is in second, third, fourth, fifth position, whatever it is, or if back taxes are owed on it, right?
Yep.
Or
subject to HOA liens, subject
Correct.
to taxes, subject to. We have a property we just took back. It's $46,000 Y green for windows and roof. $46,000 that's owed on this property that the bank is going to have to pay or pass it on to a new buyer. So that third party buyer bidder buys it, or the bank buys it back, and that is when it becomes an REO.
REO. So let's jump into how realtors become involved. So I know there's different phases. You can either leave the property or you can fight to maintain the property, right? I want to add some numbers really quick. In 2024, no, it's February 2025, Florida Realtors released that 2,973 foreclosed in the U.S. That number was down 25% from the year before. Same year, 20,994 foreclosures were starting. Now that was down 4%. Now looking at those numbers, it let us know something's happening between the start to the end. Some people are maintaining, some people are either going through and finalizing and leaving the property. So what is occurring in that middle section from the start to the end that allows agents to become involved to either help or sell that property?
Good question, and that's what I was talking about. We were talking about upstream, right?
Yes.
This notice you can go to IMAP, which is let me do a shameless plug.
I always share the auction date and foreclosures. I might put myself in a place I shouldn't be, but I'm like, look, you can look at auction dates on foreclosure. And they're like, how do I do it? What do I do next?
Exactly.
Talk to your broker.
Yeah. So IMAP is one of our Miami exclusive tools, and on IMAP you can find the list pendants filed.
Yes.
And as soon as the list pendants is filed, it's public record. So you can knock on the door and say, hey, obviously you're not going to knock on the door. You have to perfect a script, and you have to learn how to approach that. And
Because it's very emotional.
It's very
especially
emotional.
from the owner side.
You can't be there like, hey, I know you're in foreclosure and I want to list your house. I mean, that's not
No, we
the
don't
right
wanna do
approach.
that.
Like, hey, look, I know you may be being approached by a lot of people who are trying to buy your house, and I imagine that you probably want to keep your house. So I'd like to invite you to have a conversation about different options you have related to keeping your house, and then you'd have to be maybe get your certified property
CDPE.
distress expert, CDPE, and learn what those steps are. They could do a deed in lieu. They can do a short sale. They can do a loan modification. There's different options for them. Have a conversation with them. The truth of the matter is, if they're in trouble, probably going to have to end up selling that house.
Right.
But you can't hit them with that over the head right off day one.
But being that source initially to let them know their options.
To be the source of information, tell them you're there to support them, and have a conversation.
I love what you said there, right? Because it's having the conversation, and you're like, you might want to perfect a script. I was just talking to a group of realtors probably last week Thursday, I want to say, and my whole comment was, you have these conversations looking for a yes, but I want you to change your mind frame and start looking for the no, right? Because if you have more people telling you no, that's where the learning is.
Okay.
The yes is just, okay, you convinced me that I'm going to work with you, right? But you don't learn anything from that. You learn the process after the fact. But from the no, you learn more about what the consumer is looking for.
Yeah. You brought up a great point. A lot of salespeople are focused on, going for the yes, and consumers learn that the easiest way to get a customer, the salesperson to back off a little bit is to actually tell them yes,
and then ghost them,
and then ghost them. That's no joke.
Yeah.
So as a salesperson, if you learn to not be about the yes and be more about really trying to figure out, is there a problem? In this case, we know there's a problem.
Right.
Although many of them, and I've done the door knocking, by the way, and many of them will tell you, no, it's resolved. We're fine. Everything's been fixed. I already have my attorney on it. Okay, great. Then there's follow up to that. Sure, I'd be happy to stay in touch with you. Do you mind if I leave you this pamphlet of information? You know, engaging with that communication. Would you like me to run a quick valuation on your home? Offering things of value and just being genuinely interested in being of value to service. Like ultimately, who wants to see a person lose their home?
Right.
Nobody. So that as a real estate professional, as a realtor, your duty is to help them figure out options.
Right.
And ultimately, in the long run, if the option is, hey, you know what, I decided I'm going to sell my house, great, there you are. And a lot of people have equity.
Yeah.
I was going to ask that next.
A lot of people have equity, which speaks to why people are avoiding the foreclosures because they are going into foreclosure, but ultimately they're selling before the final judgment or the final sale date.
Right.
So you can be that guy. I talked to a guy who has a $800,000 home. He owes $45,000 on the home.
Okay.
And he's in default. But he can't afford the payments anymore. I mean, he's gotten his principal down to for $40-something thousand, and he's got an $800,000 home. But he can't afford the principal, interest, tax, and insurance payment anymore.
And I know some of you are looking at this and saying, well, why doesn't he just take a line of credit or something like that? But when you're going into foreclosure, your credit's getting ruined.
His credit's ruined. He doesn't have employment right now.
Yeah.
So taking a line of credit is not an option for him. But there are other options. You know?
There are other options. And what people need to realize is you may not like the options that you have in front of you, but you do have options. Sure. Right? Being backed into a corner is not the only option that you have. Right?
Yeah. And if you become skillful, you have some level of compassion and can connect with people at that level, and you genuinely care, and this is something that you want to be compassionate about. This is a great focus point to be at. Okay. You know, you need to set up a team around you. You need to figure out how to structure it. But there's nothing like going and knocking on the door to figure out what you did wrong, right? So you go knock on the door and you try your best to communicate what your intentions are, and you realize that you got the door slammed in your face. Maybe that didn't work. Try it again. But I mean, eventually that's part of learning how to be a salesperson, and that upstream, really genuinely being there to help is important, because there are a lot of people who are going out there and trying to get people subject to, which is trying to get them to sign over their property. And take advantage of them without them knowing. And so if you're a professional and you really care about that, there's some options. And the CDPE course that's put together, we as part of it comes out. We put that as part of our training. We've offered it. There's a great source. I've attended some of the course materials, and I think he does a great job. Tony Martinez.
Yes, correct.
One of the things you said is when I do sales training, I tell people this all the time. It's the most important thing that any salesperson, I don't care what industry you are, any salesperson has to learn. When you're genuine about something, if you genuinely want to help somebody, the other person that you're talking to actually feels that. Sure.
Yeah.
Right? Because if you say, no, that's not always true. Okay, I'll give you an example. Something very small and minute, didn't really mean anything. As a real estate professional, we're on our phones all the time, all day long. So I burn through my AirPods. They last 12 months. That's it. And then they die and they burn out, right? So I went to buy a new set of headphones, okay? And I was just having a conversation with the salesperson. He goes, you know what? I think I have a coupon for $5 off. It was 10%, right? It's only $5. Didn't really make a difference either which way, right? I left there. I got a phone. I was like, yo, go to this store, talk to this person. Why? Because he made that connection, right? And he genuinely cared. He's like, man, you got to replace him that often? I'm like, yeah, I'm on the phone like literally 10 hours a day. And he's like, man, it's got to be a cheaper solution for you. He's like, I can't do much, but here, I'm going to do
something. That's
nice.
And you feel good about and he had to have felt good. Not just because he made a sale, because he helped somebody. Right. I'm going to tell you right now, I've sold a lot of properties over my career. When you put somebody into a home for the first time, or you help somebody from losing their home, preventing that from happening, the feeling that you get for them and that happiness that you are for them, that's unparalleled. Like, there's nothing that matches that, right? And we get to do this on a day-to-day basis.
Yeah.
So it's very, very different as to what you get to see when you're doing it from a genuine place. I've had agents come over the years and say, you know, I do this for this reason or that reason because I want to help people. But when you're really genuinely feeling that emotion going through it, when you talk to people, it comes across. And like you said, the consumer, they have a good detector of not genuineness.
I think we all do. Yeah.
Like find a PG word.
That's exactly what it is. Find the PG word for it, right? But they do. And I think that, you know, when you said that, it really resonated with me because this is more than just a sale, right?
Right.
This is really helping your customers retain their house in a lot of instances for you. And I know sometimes it doesn't go that way, and I know you have to do what you got to do because at the end of the day, this is still a business, right?
Right.
And you still have to live with the choices that you make. But man, it's very different to see all these things changing over the years, right? And how the process runs. Where do you think we're going now with this?
No, I mean, I think we had I expect the foreclosure numbers to increase. And I'm saying that so that people don't be alarmed when it does.
Okay.
And the reason is simply this: the pre-COVID, the numbers were where they were.
Right.
And during COVID, they went way down. And the reason they went way down is because the government offered fantastic forbearance programs. And a forbearance program basically let a borrower call the bank and say, hey,
sorry, out of luck.
I'm not paying you.
Yeah.
How about that?
The
And
moratorium.
they got
Moratorium,
6 months and 1 year forbearance where they were not making monthly payments.
Right.
And so they could have done it because of COVID reasons, but they could have had a loss of job, or maybe they just said, you know what? I'm going to take a little 1 year break off of making my payments. Whatever the reason was, that basically put a halt essentially on foreclosures for about 4 years.
Yeah.
So now, you know, we're into a little bit more of a seller's market. That's existing, true. And at the same time, those forbearances are over. And so that I wouldn't say a backlog because it's not a backlog. It's just, but those people who are now finding that they don't have ability to pay like they had in 2023 have no forbearance option.
Right.
At least not the way it was. And then recently also the government, there was a change in the legislation that only allows you to do 2 modifications. If you're going for your 3rd modification, the lender's not able to give it to you, period, by law. So that also, because people were doing modification after modification, kicking the can to their own personal problems. So you're going to see some of that come out into the market. So you might say, oh, you know, foreclosure numbers have doubled from last year. Yeah, they went from 6 to 12.
And that's the part listen.
The media headlines.
It infuriates me because coming out of COVID, they're like, foreclosures went up 130%.
Right.
That means we went from 0 to 130. Like, yes, it went up 130% because it fulfills a narrative that you want it to say.
Sure.
But that's not the reality of what's happening.
Certainly not.
When you look at it as a totality, and I'm not sure about this number, but and you'll be able to kind of tell me if I think we're still well below where a normal market would be.
Yeah. We're like at 1%, and normally the foreclosure sales track around 3%.
Okay.
So that's what I'm saying. Like, are we can literally go up 300% from where we're at today, and we'll be back to normal in terms of number of foreclosures that go to sale. So, like our numbers. So that's why I'm saying it here and now that you will see an increase in number of foreclosed properties.
Just as everything evens out.
But it's just that things are coming back to normal.
Right.
So get ready for those headlines. You know,
Right,
it's
right.
gone up 3,000%.
I've already seen them.
And you add in 12.
Exactly.
You know?
I wonder though, how does the appreciation of homes influence this? Because we hear it all the time. Like
Equity.
Miami's #1, the appreciation keeps going up.
Correct.
How does that influence this process?
That's part of it, right? So if you cannot pay your mortgage, you have a very simple solution. You sell your house, you walk away with several $100,000 in equity that you have. It's not, it's not like people are backed against a wall. So I'd like to speak to like the differences, some of the differences between '08. People try to say, "Oh, we're headed for another '08."
Yeah.
I've heard that. I've watched some of the fear mongering, YouTube. Look, I've been trying to build a YouTube channel. It is not easy when you're not trying to fear monger people, right? So the fear mongering, people love it. They just jump all over it. So there's a couple people I follow, and I listen to some of the stuff they have to say. Some of it has some validity, but they leave out a lot of other facts. If you're not an expert, it's gonna sound like it makes a lot of sense. It makes a lot of sense what they're saying, but the buts to that, they leave out all my buts. But I'm like, but yeah. So
and you and I have had this conversation quite a few times.
Quite a few times,
right? And I'm gonna tell you, there are people out there, and I 100% agree with you. And for me, it's infuriating because I see the real data. Like we get the real data. You can go onto our MLS. We have, if you go to MiamiRealtors.com, shameless plug, right? You'll find an economics page, right? And Gay does an amazing job of really breaking down the numbers. And I'm sorry, you guys already know this. I'm a numbers nerd, so like for me, that's like Candyland. So I just like kind of look at it on a day-to-day, weekly basis.
Right. And the numbers takes the bias out of it. We can see clearly what's occurring without the noise of the media. And such.
And that's the thing. There's so much noise. There's so much noise based on whatever narrative, whatever side, or whatever person wants to tell you.
Yeah.
And I think that's where you're going with this.
I am a little bit. And the problem with that, Larry, is that, and Jalina, is it bothers me about that is that it'll stop a young family from buying a home today because they're afraid. And then all those fear-mongering people, they'll be fine. But this family will miss out on potential upside appreciation over the next couple of years that they would have missed out on just because they were afraid.
Right.
And you, as a real estate, as a homeowner buying a home, trying to time the right time to buy a home is impossible, right? Trying to time the cycles of the market is impossible. Real estate's a long-term play. So you buy now and you hang in there. If you can afford those payments and you plan on being there for 5-7 years, you have nothing to worry about. You just keep buying, you keep going.
You're preaching to the choir here. I'm like, yes, I hear you. I'm listening. Let me make sure I take these to heart.
The best time to buy is when you can afford it.
If you can afford it and you feel comfortable with payments and you don't have any life-changing experience happening in the next 5 years where you're going to be selling the home in the next 5 years, then if you're going to be selling, if you know you're going to be selling in the next 5 years, then maybe it is not a good idea to buy. Really, I mean, maybe it's better to rent. And I'm not a staunch you got to buy person, but if you're going to be there long term, then buy for sure, and forget about what the cycles of the markets do. But this is not a 2008 cycle. It's not, and it's not because of a lot of reasons. Number one is the Dodd-Frank bill changed a lot about how mortgages are created. Back then, they were giving mortgages to people that literally had no job. They were giving mortgages to people that just based on whatever they stated. They were giving mortgages to people above and beyond. Without any down payment.
I read an article that called it toxic mortgages.
They were all toxic. It's all terrible mortgage products. And it was an overinflated appetite to get mortgages out to the public, and people were just going for it. There was adjustable rate mortgages. They're called a pick a pay product that was out by Countrywide Mortgage. Like you literally were able to pick your payment. And of course, people picked the lowest payment, but that payment was a negative amortization loan. Not to get into that, but the bottom line is, you owed more money every month that you own the house. So
they would say to you, how much did you make last year? 65,000? Oh, okay, 65,000. How much did you make? 165,000? Yeah, okay, 100.
So you had those factors. You also had a lot more inventory. So we didn't have the inventory constraints that we have today.
Right.
Miami wasn't what it is today either, like with the international presence that Miami has today and what Miami really represents worldwide. There's a lot of reasons why I don't expect there to be another 2008. But listen, any real estate, any business is cyclical and it has its cycles. So if you see inventory and REO going up a little bit, it's not like, oh, it's 2008 again. No, it's not going to be 2008. We saw, 50% depreciation in home values, in 2008. It was a real estate economy led by a real estate recession not where we're at today. If there is a slowdown in the economy, it'll be because the economy slows down, jobs slow down, and then that results in more distress. But not like, the real estate market just collapsed because it wasn't done properly. There was all kinds of funny business being done, and you could watch The Big Short for all the details on how that went down.
But it's great to see somebody that's actually in the weeds of it every single day saying, okay, yes, you're going to see it go up, right? And they may have this narrative that it goes up 3,000%. But look at the actual number.
Right.
3,000% might just be
relative.
It might be 300.
I didn't say nothing about 3,000. no.
Right, but it might be 300, right? It might be 300 foreclosures.
Well,
it equal out to 3,000%,
It's at 1% now.
Yeah.
Okay.
So and the average is 3.
For foreclosures.
If you look at all the homes sold in a particular market, and you say REO yes, 3% of them are REO yes.
Okay.
Today is only 1% of them. So that's historic.
Right.
So we're going to probably get back to normal.
And people think that it's at 1%. That's a good market. That's actually not good. That's not good. That 3% ratio helps with stability.
Yes,
it really does. And people don't understand that when you're talking about stability of the marketplace, you want to have that. You want to have a little bit of loss. You want to have a little bit of overbuying. You want to have a little bit of underbuying. Like you want to have these different avenues for everybody.
Sure.
Because that's what stabilizes the market. Doesn't matter what kind of property you're looking for, there's something there for everybody. Yeah. When you have that 1%, there's none. There's none out there.
Right. Yeah.
And I was wondering with the REOs, when we first started, you mentioned people buying at a hypothetical number, 7,000 for the REOs.
Yeah, that's my number.
Who benefits from buying REOs? Because I've seen some in the MLS that says as is. Investors really will benefit from this. Needs a lot of work. Who can really benefit from REOs? Is it that first-time home buyer? Is it the investor? Is it that I need to downsize my property? Who benefits from REOs?
So this is another segment where our realtor members can become experts in.
Right.
So many realtors are turned off by working the REO. Why? Well, because it's not as touchy-feely.
Yeah.
It's, you may not get the listing agent on the phone to, if you do, you're going to ask them questions like, how old's the roof? What's their motivation? Yeah. Like those are questions that
you ask
an REO agent because.
And you mentioned they're more like property managers, right?
Right. Well, we don't know the age of the roof because we just took it over. And if we did, our clients are generally instructing us not to do that type of due diligence work because if you do say the roof is X years old, then you're putting you and the client who doesn't really know what the history of the roof is. So my point is that if you want to be an agent that represents buyers purchasing distressed real estate, there's an opportunity. It's a huge opportunity. Right. And one of them is to educate the buyer on how to get the right type of financing in place. Because
I think we need a part 2 for this conversation.
So there is financing available for distressed real estate, like property. I have a property in Miami Gardens that that's the one that $40-something thousand. The house has a new roof, new windows, but the electrical system is gutted and the kitchen's gutted and the AC is gone. Okay, well you can't get a conventional financing loan, but you can get a renovation loan. It's offered by Fannie Mae and Freddie Mac. Or an FHA 203 renovation loan offered by 203K offered by FHA. And now, if you prepare your buyer on how this works and you get them the right lender, you can come in and make an offer. Now, here's the beautiful thing. This property will be listed for sale and it'll be under a first look period, giving exclusive access to owner occupants to purchase this home.
Okay.
But unfortunately, I will probably not get any offers on that home for that property in that condition. Why? Because most realtors will discourage their buyer away from it. They won't know that there is an opportunity to purchase this property with that type of renovation loan. Get a renovation loan, really understand how it works. What they're going to do is they're going to add the AC, the kitchen, and what did I say? Oh, the electrical, all as part of the purchase. So it's the purchase price, or as part of the loan, excuse me. So it's the purchase price plus the renovations. That's your loan amount. And that program exists, and that property will be sitting on the market. And then as soon as it becomes available for investors, a flood of offers comes in. And it's a shame. Larry did a deal with me that it was a great property. It was an investor who bought it. But that could have been an owner-occupant property. Could have gone through renovation financing. It would have.
Do you want to hear something funny? He moved into that house.
Oh, he did?
The investor actually sold his old house and moved into that house.
There you go.
You know why? Because after he did the renovations, he was like, man, this house is beautiful. And he moved in.
There you go. There you go. So,
And it was beneficial, but that doesn't always happen, right? But that goes to show you that, to answer your question, there are a plethora of people that can benefit from buying an REO property.
Sure. I would just like to see more of our realtor members get educated on what they need to do to educate their customers, to be prepared to go out and make offers on these owner-occupant properties. Because part of the guidelines from them purchasing these loans from these notes and mortgages from Fannie Mae and Freddie Mac is when they go to foreclosure and they offer it for sale, it has to go to the public. And it has to be for first-time home buyers, owner-occupants, I should say. And, you know, there's a great opportunity to buy a property a little bit below market, put the renovation cost in, and then be at market, but have a beautifully renovated home. But a lot of buyers and realtors aren't aware. It's a combination of the consumer not really wanting to go through that pain, and the realtor not knowing it's available and how to sell it, and also lenders. Very few like to do the programming because they don't get paid as well, and it takes they get paid the same, but it's a lot more work.
Yeah.
So if I'm a first time home buyer, right? I'm going to give you a scenario. If I'm a first time home buyer, and you have a property that's exclusive to first time home buyers, okay, but it needs a 203K loan. Do I have to know how to fix all that stuff? Because look. I don't know how to put in an AC.
Right. So, in fact, no, you can't actually, because FHA will require that you bring contractor. That contractor has to be approved. That contractor bids have to be approved.
Approved through the
program, through the lender. Yeah. So it's all part of the process. So no, you have to have a licensed contractor do the work. Yeah. You can do the paint.
Yeah.
But the licensed work needs to be done by a licensed contractor.
Because I think that's where a lot of the misconception comes in, right? That I'm going to have to be there on the weekends, the weekend warrior fixing up the house, that you can't. But what you're talking about is essentially financing the renovations of the house to get it into the condition that you really want it to be.
Right, and the lender will do it. Would you rather buy the house after some fix and flipper guy puts some lipstick on a pig and sells it to you, and then you don't even know what's behind that pretty wall that's just freshly painted, but you don't know the kind of work that was done behind that wall. But if you buy the house in disrepaired condition and you supervise the contractor, not
even that, it's made to your taste.
Yeah, all the colors, everything is made to your likings and your taste. A lot of buyers are discouraged from it, which I wish more would be encouraged to, and a lot of realtors don't know how to sell it, and a lot of lenders don't want to do the programming.
So would you say our realtor members need to take more classes? Are there classes available, or that relationship component of getting in touch with our realtor members who have been experienced in that aspect?
I think the education can come from the realtor seeking a
mentor, maybe?
A lender.
A lender, okay.
A lender, go out and find a lender. Do you do renovation loans? What's your experience doing renovation loans? There's very few, but they're very good, and the ones that are out there, they're willing to do the extra hustle.
Yeah. Does that impact their closing costs at all, or down payment? Does it make it higher, lower? Like, how does that? Yeah.
No.
I know it's a generic question for.
Yeah, I mean, it is a hypothetical.
Yeah.
Jalina's like taking. I think you're taking notes. Jalina's like,
I want to own property at some point. So I'm looking at my options.
Like, I can't
203K.
Asking for a friend.
I am single. I don't have a husband to do this.
Asking for a friend.
No weekend warrior work. Got it.
Who can I hire?
Licensed contractors.
So. Yeah, I mean, there is some implications. There are those loans generally are going to be a little bit more expensive.
Okay.
There might be some extra fees involved with certain aspects of that. But to me, building in your own HGTV opportunity to renovate a house to your liking and then have it at or just at market or even a little below market when you're done. I've helped a lot of clients do this, and they're thrilled, how much equity they have after they're done and the opportunity. It's a little bit painful because, you're buying a house. You can't just quite move in. You got to renovate it first. And there's some hiccups with it. But the
option's there.
Why would you let an investor take all that equity when you can be taking it?
I did that with my house, right? And mine wasn't an REO property. We just bought a regular house.
Right.
And when I bought my house, we went in, we had to renovate it because my wife didn't like this or didn't like that. I didn't like this or I didn't like that. and we spent a couple of months renovating the inside of the house. I mean, it wasn't a full gut, but we did some work to it.
Right.
We had to paint it. We had to make it our home.
Right.
And that's the thing. If you're gonna do the work anyways, you might as well look at other opportunities that come up.
Yeah. So the realtor needs, and his team, if they want to do this, they need to have a good lender and a good contractor.
Okay.
And then understand the selling points to convince a buyer to go after that type of product.
And that's the REOs.
And that's the distressed real estate. Yeah.
All right. So I'm gonna ask you point blank now. Point blank, here it goes.
Uh-oh.
Ready? Okay. You lead the largest trade organization and realtor organization in the country.
Yeah.
Okay. You're talking to yourself 20 years ago now. This is almost 20 years you've been doing this, right? You're talking to yourself. How would you tell yourself to get started?
In the REO space?
Yeah.
Oh, wow.
Because things have changed now.
Yeah. So as I said to you, I kind of fell into the business, and a lot of people I know fell into the business.
Right.
So I would say that if you want to get into the business, you would start with maybe doing some broker price opinions, right? You can do broker price opinions. There's several companies out there. I would look on Facebook and to look for. I would first start with trying to become a buyer's agent for REO. Because let me tell you, there have been many agents that I know that turn into REO agents as a listing agent by representing buyers on enough transactions, and
their name is known.
Their name becomes, because your name goes into those system portals, so
Okay.
they know. HUD, for example, you can't get a HUD contract to sell HUD REO unless HUD sees by your NAID number that you have sold their properties before. So I would say start there. Understand the buy side of that. The other thing I'd say is do broker price opinions. And while
what are
you're
those?
doing those are valuations like a CMA, but
Okay.
they're a little bit more professionally done in terms of like the form has to be on their form, on their system,
Okay.
under their questions and standards. Like you throw a CMA together, I throw a CMA together. They might not be the same,
Right.
but if we both do the same property on the BPO form, it's
Gotcha.
going to be a lot more uniform. So the BPO is a more uniform CMA,
Okay.
broker price opinion. So thank you for asking these questions because it helps me refine some of the nomenclature, right? So how else would you get there? I would say Facebook groups, LinkedIn groups on REO. Ask questions. Ask Chat GPT. Get it. Like just start digging and committing to that. The other thing I'd say is there's conferences. There's one coming. And I'll tell you one that's coming to South Florida.
Yeah.
It's NADP, the National Association of Default Professionals, is having a conference at the Boca, which is a fabulous hotel, worth going just to be at that hotel. And there'll be asset managers there, and there'll be realtors from all over the country that specialize in selling REO. And you can go there, pay the fee, attend the classes, get involved. The word, you may not meet, the first time you go there, you're not going to necessarily meet the guy who says, okay, here's a bunch of properties. He's going to say, how long you been doing this? What do you know in the business? And you're like, I just started.
Right.
That might not be the right entry. But hey, look, I just started, but I've been coming to this for 3 years now. And I've been seeing your same face. And eventually that guy's going to give you a cut, right? Like give you a break, or I would say meet other REO agents in other markets that would then not only take a liking to you, but also would be willing to connect you to some of their clients because you're not a competition. Don't ask me where I get my REO business from because I'm not going to
tell you.
But
Let's be honest. I'm not going to tell you where
Right.
because you know what? You spent your career cultivating your clientele, right? And you shouldn't. Right. But I will tell you a story very quickly about these conferences. I was in corporate real estate, as you know, and that's where a lot of my exposure came at. And we were buying a farm. Okay. And I went to National Association of Realtors annual conference in Boston. It was in Boston that year. Okay. And the reason why I went there is to get education on farmland, right? Agricultural land, how to value them, stuff like that. Okay. At that point in my career, I didn't know a lot of people within our organizations. So this was my first national conference that I went to, and I sat down and I was asking in the class a ton of questions. I was just there asking a ton of questions. And there was a gentleman from the Midwest that I still, to this day, still conversate with him every once in a while, that was like, at the end of the class, the training class, he goes, hey, you have a lot of questions. Here's my card. If you need anything, just give me a call. I was like, yo, if you have a couple of minutes, I would love to have a cup of coffee with you just to kind of get some of these questions out that I really know the answers to. He was like, okay, well, how many acres are you buying? How much cattle is on there? And I'm like, I don't know. I have no idea what you're talking about right there. And then he broke it down for me. When you value agricultural land, it's by cattle head. Depends on if it's male or female and what you're going to be doing with it and what type of cow and all this stuff, right? And it was because I went to that conference and wasn't scared to actually speak up that I got the education. Let me tell you, he helped me with the first transaction that I had. He helped me with transactions after that. But that network that you build, just having a cup of coffee at these conferences are invaluable.
Yep.
Some of the best friends that I have today in our industry, I met or have gotten close to at those conferences.
Yeah, I know. One of the things about doing the REO, I know people all over the country, which is cool.
Yep.
And a buddy of mine, he's from Alabama, and he just reached out to me. He was at the Coldplay concert this weekend.
Yeah.
With his wife. With his wife. He brought his wife.
Love how that
and we went to dinner, and so I know I have a buddy in Alabama, and I got some in Atlanta, and I got some in California. Those relationships, right? And so the funny story about this, and this is why it blows my mind about realtors. Why do I want to? I get this question a lot from realtors. Why do I want to network with other realtors? Why would I want to do that?
And I honestly had that thought too when I first started the association with our networking events. I'm like, why? So
why would realtors want to network with real? Well, I'll tell you a story. I was networking with one realtor, and he said to me, I met him at one of the national conferences. This guy's from Dallas. His name is Logan Waller. And he reaches out to me. He goes, hey, you're going to go out to the NAHREP conference. And I said, NAHREP? I've never heard of that. What is that? NAREP, the National Association of Hispanic Real Estate Professionals. I had never heard of NAREP.
Right.
And this guy from Dallas, who, by the way, is not Hispanic, reaches out to me and tells me if I am going to go to his Hispanic conference. He assuming that I have to know because I'm Hispanic.
Because you are. That's all I'm about to say.
He's like, this guy's got it. I'm going to call the guy in Miami to ask the Hispanic guy if he's going to the conference. Can I be his wingman?
Right.
And I said, when's the conference? He goes, it's in Vegas and it's this Friday. I said, I'm there.
Right.
So I go there. So that was number one. If I hadn't met him before and struck a chord with him, he wouldn't have called and asked me if I was going. So I wouldn't have even known about this opportunity.
Right.
I go to that conference. I sit next to a lady. Her name is Blanco. She's out of the Naples area. And my grandmother's name was Blanca. Yeah. I mean, her name was Blanca. Blanca wasn't Blanco. It was Blanca Contreras. My grandmother was Blanco. So I said, oh my God, your name is Blanca. My grandmother's name was Blanca. Could you imagine Blanco, like white?
Yeah.
And we joked about that. And her and I had a conversation. The week later, that woman who barely knew me sent an email to Freddie Mac, which is one of the second largest loan mortgage servicer in the, not servicer, excuse me, mortgage, I'm going to give you another acronym, GSE, government subsidized entity. It's the second largest government subsidized entity. They have a lot of foreclosures at the time. And she referred me to them.
Wow.
That's still my client today. There's one of my clients, by the way, if you want to know one of my clients. So that relationship, so two realtors and know each other, don't even know each other, story gets better. I said, why don't we have a National Association of Hispanic Realtors in Miami? So I started asking questions, and I became the first president of the National Association of Realtors in Miami, and we started the first NAREP chapter, South Florida. It was 2012.
That is phenomenal. I did not know that.
That's the power of relationship and commitment to meeting people and just finding out how can I add value to your life and maybe how can you add value to mine.
Right.
I mean, but that's not, you're not really trying to, some people don't do the networking part right.
No.
They really go like for the jugular. But if you learn how to do it, and there's books on it, there's
classes.
It's classes, it's a practice. I learned how to do it. I have a trick. I never give out my business card.
Interesting.
So I'm going to sum it up for you in a few words.
You want to know the answer to that, but I'll go with it. Go ahead.
People do business with people they like.
That's the Little Red Book of Selling. That's a great book. That's the first line. And the second line is people would rather do business with people they like, even when their services aren't as good as the other people.
Yep.
So then when you ask why do people do business with people like other people that aren't as good as me, haven't sold as much as me, well, because they like them more.
Yep.
So that's what it comes down to.
The reason I don't give them my business card is my goal. If I give them my business card, it's too cheap. What I think is that I want to have a conversation with you in such a way that you're going to want my business card. And I'm not going to give it to you until you say, hey, you have a business card? And then I say, sure. Hell yeah, I've been hoping you would ask for a long time. Here's mine. You have one too. And that's when that business card changes. My goal in networking is have a conversation worthy of them wanting to engage with you further. And such that they want to, hey, do you have a business card? And that's, you know that you're that much closer that, you've had a connection. If that doesn't happen excuse me, I actually might talk to that person 2, 3, 4 times before they finally say, hey, give me a business card. And it's hard not to be like,
here you go.
Here, call me. And I never ask for business and I don't give them a business card until I know that I've earned their trust enough for them to, and that works. And that's just a little tip on networking.
But it's funny because we've done deals together. And when we first started, I was like, Eddie, I'm going to call you about this. I had to actually ask him, and I'm kind of playing it back in my head now. I'm like, wait a second.
Eddie played his trick on me.
But it's funny because earlier in this conversation we were talking about you got to get used to the listing agent for REOs not answering the phone. I don't have that problem. Most of the listing agents I know for the REO stuff, I have a relationship with them.
Well, that's the other thing. I have agents who are serial agents that work with our team, and they sell a lot of properties because they've figured it out. They have figured out the magic sauce, and there's nothing magic about it. They understand. They see the property. They know where to go, get the lockbox, go to showing. They know, and they call the team. They call me. They text me. They already know, and I already know. And then when there's 2 offers on the table, and the client says, which of these 2 offers should we go with? I'm like, listen, this offer, I've never dealt with this agent, but this agent, we've closed 4 deals together. They're solid. They know how to control their client. They really are educated. They work with a great lender. I think we should go with this one. And sometimes that one is not the better offer.
Yep.
But it's the more sure offer. And many times in the REO space, the more sure offer is the better offer.
Right.
Yep.
I'm not talking $10,000, $20,000 difference, but sometimes when they're just, right there, the more sure
it's
offer.
a hair apart. Yeah.
It could be a hair apart.
Listen, and it's not just in the REO space.
It's just in every business.
It's in every space.
Of course.
Sometimes when you have that relationship, you know that the transaction is just going to be smoother, right? And you assume that it's going to be smoother because your track record with that person is much smoother. Because I'm going to tell you, sometimes these transactions are a nightmare to deal with.
Oh, they are.
Right? And sometimes it's just easy. And if I know you and have a relationship with you, we can cut through all the games and running around, and I can just be like, Eddie, all right, where are we at? What are we doing? Okay, this is where we're at. This is where I'm at. This is what we're doing. Okay, and we'll get it done, right? And it might be, I can't give you 7 days for the inspection. I can give you 4 days, right? But I know somebody that'll come in 2 days, and we work together as a team to get the deal actually done.
Yeah.
Because at the end of the day, it's putting these people into these houses to help them move on with their life.
That's exactly right.
Right?
Exactly
It's not tying it up to I'm not trying to win. I want them to win.
Right.
And it's a whole different mindset when you know these. And I'm going to tell you, for me, what changed my perception of this whole conversation is when COVID hit. I knew so many realtors at that time because I had just really gotten involved on a high level with the association. And I was going to help some of my clients buy properties. And I'm like, hey, I know this agent. And I would call and I'd be like, hey, you got this listing at this, and this. Hey, Larry, how you doing? I'm like, good. I'm going to submit a listing. We have 25 other offers on this property. They go, but send your listing anyway.
Your offer.
Yeah. Send your offer anyway.
Right.
And I'd be like, okay. And I'm going to tell you, because they knew me and they didn't know those other agents, they would be like, all right, we're going to accept your offer.
Another reason why you want to network with realtors and get to know them, because it's a relationship and trust game, right? Like if I have a relationship with my customer and then I have an option to work with one agent I have a relationship with, one with I don't, I feel more confident that I'm going to be able to get it to the finish line, that my customer is expecting me to be able to do that. So that's really the name of the game. I remember I started back in the day when we used to be all in a community and you all knew each other, right? The market, because of technology and the advent of technology and the way I think the internet also has changed that. Like agents have gotten more spread out, wider, but we used to like be really much more communal. Like you worked the Northwest Dade area, you had no business going to down south. You just refer the business that way. It was different because you had to know the people.
Right.
You had to know your people. You literally, if you didn't know the people in the business, in the market, you weren't going to be successul. It's crazy.
Was that when MLS was in books?
Come on, you're gonna do me like that? You're gonna do me like that? I came in after the books, okay? After the books.
Yes.
I had to throw that in there.
It was still printing on that old machine, you know. I did tell you about the.
Listen, okay, so I'm not gonna make fun of the machine, okay? Because I still remember when I got into appraisals, we had plat maps and digitized maps weren't that thing yet.
Okay.
So it's all funny until it comes back to you.
Yeah,
right?
those plat maps. I remember those.
You used to have to make an appointment. It's funny because you used to have to make an appointment, and they used to have the whole county in these big plat books, right? They're huge. They're like half the size, and then you would turn the page, and you would have to by streets and sections, and it was like a whole thing. Now it's digitized. You can get on a map. You just zoom into where you want, but way easier. How did we ever get along without that stuff?
I don't know.
The community for sure. But we have definitely covered so many wide topics when it comes to foreclosures and REOs, the entire process, whether you're the agent, the buyer. What are some final words we can give our listeners and viewers, some information to work the system or engage with buyers who want to buy REOs?
Yeah, so I would say that it's like all I think the business agents have to really figure out their niche, right?
Okay.
And it may not be, it's not for everybody, that's for sure. But if you're listening to the podcast and you've gone this far in the podcast, then maybe it is, right?
Okay.
And you're thinking, you know what, I want to pursue this. I would say CDP is a good course.
Okay.
I would say maybe going to the NADP conference that's going to be in next month in Boca. NADP, Rio Mac is what they used to call it back in the day. I'd say explore that. I'd say check out the Miami Association. I did a class on HUD.
Yeah.
I'm going to be doing that again in Broward. I'm not sure the dates, but look for that.
Good.
That's coming up. Those are some ways to start.
Okay. Education and connection.
There's plenty of education books out there. I'm a resource as well. You know, my email and contact information is on our association website. If someone wants to reach out to me and says, I'll buy you a cup of coffee. They might have to buy me 2 cups. A cup of coffee. A tea perhaps, and we'll be happy to have a conversation. I'm an open book. I'm happy to share. So,
Wonderful.
yeah, those are some ways to start for sure.
Absolutely. And Larry, is there anything you want to share about final takeaways from today's conversation?
For me, it was just really that, you know, all of this has to be for a bigger purpose, right? And you have to look for your why. We like to say that. One of the things I tell all my agents all the time is, everybody has the same license to be able to do the same things. Oh. What makes you different? And I think that, Eddie, you've found what makes you different, and you've been very successful at it. And I think that's where a lot of real estate professionals kind of lose themselves, especially in this fast-paced world that we're in now.
Sure.
Once you find that, I think you'll be a millionaire because you'll have a purpose to what you're doing.
Yeah.
So really just, find what really drives you.
Absolutely. Well, thank you so much for joining us today. There you have it, your Broward-MIAMI Inside about REOs and foreclosures. We'll see you next time.
Thank you so much for tuning in to the Miami Association of Realtors official podcast channel. Make sure to hit that subscribe button and please rate and review us. Until the next time.